Nobody told me. Nobody called me. All right. So we're going to summarize these profit rules again. Let's do it again. All right. We're going to summarize these profit rules again. All right. There are really kind of, I've laid out 5 rules, but these rules are the 3 main ones that I want governing the vast majority of your activity in the profit territory. Okay. So here we go. Here we go. All right. The 3 main profit rules. Okay. Rule number 1 is your 30 to 50 cent profit rule. Okay. Your 30 to 50 cent profit rule. That's going to be the first one we deal with. 30 to 50 cents. All right. Now, remember, with this rule, you're taking 30 cents if you're 50s and below in terms of the stock's price. If you're above the 50s, like 60s, 70s, 80s, 90s, 100, you're going to use the 50 cent rule. All right. So price is a determinant here. Okay. Now, one thing that's very important is that you only can take 1/3 to 1/2. I would not do more than 1/2 after achieving the 30 to 50 cent rule. Very important. I would not be taking 3/4 or anything like that. Up to 1/2. Less than 1/2 is okay. Up to a maximum of 1/2 on this rule. Don't cut yourself too short. All right. Then there's the second one, which is the 3 push rule. 1 push, 2 push, 3 push, boom. So we can take a profit here on 30 to 50 cents. We can take a profit here on the 3rd push. Now, here is where you earn full profit rights. You understand? You earn full profit rights here. You can take 1/3. You can take 1/2. You can take 2/3. You can take it all. You have full rights. You are rich here. Do whatever you like. If you don't take it all, don't lose what made you rich. You see, you became rich with the 3rd push. If you take partial profits, don't lose more than what made you rich. So, boom, you're out of the rest there. You see? Don't lose what made you rich. Don't go back to being poor again. Don't go back to poverty. Don't go back to the beginning. All right? That's the only caveat. But there are going to be times when you don't want to take everything here because of the way this bar got you there. And if it got you there like it's still a young chicken, if it got you there with a certain amount of power and velocity, there's probably more left. If it struggled to get there, maybe not. But if it got there as if it's not even close to being tired, it might have some more velocity left in it. Okay? All right. So we've got rule number 1, 30 to 50 cents. Boom. Rule number 2, 3 pushes. Boom. And main rule number 3, new high after a pullback. After a pullback that stays in the upper 50% of the previous move from low to high, we revert to what's called the new high rule. As long as the bar before the new high is green, you have a right to take the profits there. Boom, new high. Pullback stays in the upper 50%, new high. Boom, pullback stays in the upper 50%. Boom, new high, take a profit. Pullback breaks significantly below the 50%. We go to pushes again. 1 push, 2 push, 3 push, and out. So here are your 2 scenarios here. We get 2 pushes, not 3, and then we drop. But we stay in the upper 50%. Boom, new high. We have a right to take a profit. Scenario number 2. We get 2 pushes, not 3, and then we drop and significantly break the halfway point. Boom, now we move back to pushes. 1 push, 2 push, 3 push, out. And there you have it, traders. You've got the 3 main things that will govern how you take profits. Now, remember, I did cover 5 rules, but the other 2 rules were more refinement rules, like don't take a profit on a green bar, right? Don't take a profit on a green bar that is preceded by a red bar. I made that a rule so that it would be accentuated, but it's really more of a refinement of these 3 rules. Don't take a profit on this bar if what's before it is a red bar. You see? That's a refinement. Okay? So, you've got your 3 governing rules. 30 to 50%. 50 cent. Take up to a half. Boom. 3 pushes. Take up to all of it if you like. Boom. New high. After a pullback that stays in the upper 50%. Take all of it if you like. Boom. Break significantly below. Go back to 3 pushes. Boom. And there you have it, traders. Repeat, 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 repeat. And so, as I've mentioned, these things are going to help you get beyond some of the novice's biggest problems. When to consider a gain a takeable gain. That is at the core of a lot of traders' problems. So not knowing, not having a structure for when is a gain a real gain and when is a gain an insignificant gain to ignore, not having a structure for that, they randomly take at any gain, 5 cents, 6 cents. So they get 10 cents and then they start seeing 10 cents become 8 cents, become 6 cents, become 5 cents, and they take 5 cents. Wrong. Now you know I haven't achieved 30 cents yet. What am I doing? That's nothing. I'm using my original stop. That gain's not worth protecting. Okay? They don't know how, when a stock starts running, they don't know how far should I start to think taking some off the table at least. 3 pushes. You're going to know. They don't know. So they take 1 push. Sometimes they don't take anything on 3. It's 3 pushes and they don't take anything. Sometimes it's 10 pushes and they still don't know. Like, you're going to have guidelines that, oh, I've just earned my right. You may not exercise that right, but you know when you've earned that right. And then the pullback. This is what gets so many traders in trouble. When is a pullback okay? When it stays in the upper 50%. Don't worry about that. That should shoot to a new high. If it significantly breaks the 50%, we have to adjust now. Let's adjust back to getting out on 3 pushes. Wow. This is planning your scenarios ahead of time so that when any of those scenarios occur, you don't have to think. You don't have to analyze. You don't have to wonder. You don't have to guess. You've already, I know this. My response is this for that. My response is this for that. Pull back, new high, boom. Pull back too deeply, out on 3 pushes. 1, 2, 3, out. Okay? Get quick 50 cents. Maybe I hold off. Not so quick. I'm going to take up to half, right? 3 pushes. Take half, if you like. Now I'm going to make sure I don't lose what made me rich on the other half. This is professional trading. This is professional profit taking. Now, do I have time for this? Do I have time? Let's see. I do. Let's take a quick look. I don't have a lot of time. let's take a quick look at some real life examples. Okay, shall we? Let's do that. Yeah. Love it. Real life examples. If I can. Let's see. Da, 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 da. Yeah, here we go. Okay. There's some real life examples here. I want to, it's interesting that I have Microsoft here. This is a good one to take. This is a good one to do. So let's say, for instance, my traders know that in this play here, you see this green bar, right? You see that fat green bar right there? Okay, look. So this stock has moved like this, right? And this is the 20-period moving average. So my traders know that after a solid move like that, the first pullback toward the 20-period moving average is buyable. All right? It's buyable. Now, what many of my traders would do was they would buy on the very next time a green bar took out a red bar. So see that red bar? This green bar takes out the high of the red bar, so they're buying there. Boom. That move above that green bar right near the 20-period moving average is their play. All right? But that's not what I want to point to. Let's point to this one. This is another play. Now, you see where this green bar breaks out above this sideways movement, right? Boom. That's a breakout play. So some of my traders would also jump right into this bar here on the breakout. Boom. Their protection would be under the bar. All right? Okay? Now, if they bought in the lower part of this bar, they would actually get push one right here in the same bar. But you see the second bar here? That's not a push. Okay? And you can take this one too as push two. Let's call that push two. So we've got push one and we've got push two. But look at this one. Now my traders would not be allowed to take that one. Do you know why? Because of the red bar. Now I know I told you that if a red bar is next to it, you can't take it. And you say, well, Oliver, I see a green bar next to it. But the green bar is not higher than the red bar, so the green bar doesn't count. That's just like a red bar. And so, because this is coming out of a rest, it's not takeable. The next one is. Boom. And that's how that's very calculating. Do you understand? That's very calculating. It's not a guess as to when I've earned the right, not the obligation to take my profits. All right? And so that could be an example. If the trader took the play here, this is not significant enough. That's not that's like a this is not a push. So let's cross this one out. We know the red bar is not a push. Let's cross that one out. This is a push. 1. This is a push. 2. This is not a push, but this one is. Boom. Their profit taking comes there. And so it's not based on, I'm up $600, Oliver, so what? We are not governed by money. We are governed by rules. We are disciplined traders. All right? Look at this play down here. So Microsoft has a nice little rally and pulls back. Now my traders know that if you come back to see this fat bar right there, that fat green bar, if you come back to the range of a fat bar, it's likely to turn. So there was that fat bar. We went up and then we came right back to the top of that fat bar. Beautiful. Now, when are they going to strike? They're going to strike when the green bar takes out the red bar. Boom. Boom, there's their entry right there. Now, I would say this is push 1, push 2. Okay, because this is a $300 stock. So, you know, and push 3 up in this area. No worries, right? Now, this can also be looked at as the new high here. So see how this is the pullback? Your entry from here to here, as long as your entry is in the top 50% of the last power move, all right, your entry price is in the top 50%, you can use the new high rule to take profits. Now, remember, you don't have to take profits. You have earned the right to take profits. So this could be your pullback as well. Pullback, boom. Now, my profit-taking zone is up here. Boom. Now, let's say I do take some off the table. I take half off the table, and I ride this baby out as long as I don't lose my status as being wealthy, as being rich, back under the new low, back under the new high. I don't want to lose the new high. All right. And what you can do is what some traders do is that they start a new count, which is really interesting, right? So let's say, for instance, they took on the new high here. So they start the new count. They can't take a profit there because of the red bar. They can take a profit there because it's a green bar before it. But they can't take a profit there because there's a red bar before it. But they can take a profit there and there and there. It's their choice. They're rich. I don't care which one they take a profit on. Boom, they re-enter. They can't take a profit there because of the red bar. They can't take a profit there because there's no new high. But they can't take a profit there because that's not 3 pushes yet. See, the game starts again. The game starts again here. All right? 1 push, 2 push, nope, 3 push, boom. Beautiful, beautiful. Let's go to a stock that I'm constantly trading. Well, I've been trading for 18, 19 years now, actually. All right. You could do something like this, like, okay, look, here, remember I told you as you come into, see this fat green bar here? As you come back into the range of a fat green bar, you will tend to see a reversal. So we come back into the range of this fat green bar, but we're looking for green to take out red. Boom, green takes out this red. Look at that red there. Look at that red. And green takes it out. So my traders look to enter here. Boom. Now they get push 1, they get push 2, and they get push 3. Boom, they can take a profit. All right. Boom. Nice. Now, why would I encourage my traders? Why would I say, if I were reviewing this trade of my traders, buying the green, eliminating red in the range of a fat green bar, beautiful. Buy, 1 push, 2 push, 3 out. Why would I want them to be out on 3 pushes and disappear for a while? Because look at the deepness of the pullback. Remember I told you that when a stock, here's the power, when a stock significantly breaks the halfway mark, see here you're looking for a new high, but here you're looking for 1, 2, 3 out. Do you see that? You see how beautiful that is? That's a beautiful law. That's a beautiful rule. Now it's yours. All right, now it's yours. So, knowing when to go for that new high and knowing when not to go for that new high and getting out early on 3 push pops are very, very important, guys. Very, very important. You know, Very special stuff here. Very special stuff. What moved here? What moved here? All right. Look at here. Look. You're buying this green bar. It's clearing red. Boom. Okay. And you get, maybe you don't even get here. So let's assume that you buy here. And there's not enough but there's one push here. That's one. You get two here. But then you get the drop, the pullback. All right? But then you get your third push there. Now, why is this one a 3? Because there's a green one before it. You see? And so you get your 1, 2, 3. Now, there's a reason that I can't go into in great detail why I've chosen the number 3. The markets have a strong tendency to actually reverse on 3. And you'll see it a lot of times, 1, 2, 3, drop. All right. And then you have plays like this. See this green bar here? Boom. Clearing the red. Now, you see these little bars? These are not pushes. But you can combine them to be pushes. Remember that? So if you bought here, your first push is this. That's push 1. Here's push 2. You stack the little gradual bar moves up, and here's push 3. Boom. Uh-oh, here's another one. Fat green bar, eliminating red. Boom. Push 1. Nope. Push 2. All right. There's a green bar before it. That's fine. Not this one. Push 3. Boom. You see that? That's beautiful. So I bought this bar, but I got my first push here. Now there's nothing. You see that green bar? Nothing. But then boom, there's my second one. Now there's nothing here on this green bar because there's a red bar before it. And then 3, boom, take a profit. Gotta love it. Here we go again. Boom. All right. We can look at this as push 1. Here's push 2. All right. Now remember you 280 cents. So you could have taken your 50 cents out of this already. So you got some change already into play. Remember, 50 cents on 1,000 shares is $500. So you've collected $500 on 1,000 shares here already. Now on the, well, you have unrealized $500. Maybe you take 250 of it. All right. Maybe take $250 off the table. And now you're going for your third push up here. Or you're going to get stopped out. It's okay. That happens every now and then. But this is profit taking, guys. Here's Intel. Here's another one. Look at your move up, your pull back, and your move to a new high. Boom. You're taking new highs. Look at this clearing green bar above the red. That's your entry. Boom. Protect. I would say these are too small to be pushes, but the whole thing is a push. Push. And then these 3 are the third push. Do you see that? Push 1, push 2, and push 3. Boom. And look at the drop after 3. Markets have a tendency to drop after 3. All right. Want to start again? Boom. Green takes out red. 1 push, 2 push. Now let's place that order up there and see if this can come to papi. Come to papito. Boom. And there you have it, guys. I can show you this ad nauseum. Do you understand? I can show you this over and over and over again. And that's actually part of your training, to have you experience these three ways of taking profits over and over and over and over again, until it becomes second nature. So first you start off with it written down in front of you, and you might have to refer to it. Wait a minute, which one? Which way am I supposed to be taking profits now? Okay, 3 pushes. I only have 2 pushes right now. And you might need the piece of paper. You might need the plan written in the beginning. There's nothing wrong with that. It's like, like an actor might need the script first and then later not the script. You might need the script first. But part of your training is to really get this to not be something that you do, but to be something that you are, like walking to the refrigerator to grab a bottle of water. It's not something you think about anymore. Wait a minute, how do I do that? I get up out of the chair, I put the right foot in front of the left foot, and then I do it again, and I repeat that, and then I make a left at the kitchen. And the same way you might need a map when you move. You might need Google Maps when you move to a new area or go to a new area. But when you become very familiar with the area, you know where the supermarket is, you know where the post office is, you know where the movie theater is, you know where the mall is, you know where your friend lives. And you don't need Google Maps anymore. But in the beginning, you might need the map. There's nothing wrong with that. So these rules should be written down. These rules should be staring you in the face. They should be staring you like this, saying, okay, so what you going to do? What are you going to do? I'm waiting. You going to exercise me or what? You want them to challenge you. It doesn't work initially when it's in your mind. That's later. In the beginning, you want it to look at you like this. You want it challenging you. You want it embarrassing you when you don't do what you know you're supposed to do. Remember my Ask Oliver Velez series with that, right? Okay, guys. That was a beautiful thing. All right? There you have it. Powerful, powerful profit-taking rules.